Hello, everyone, and welcome to a great webinar here at the Crane Rental Association of Canada. I'm sorry about this. I can speak to a crowd of 300, 500, or 1,000, but put me in front of a virtual crowd and I start stumbling. So my name is Claire Bélanger Parker, and I'm the Executive Director of the Crane Rental Association of Canada, and I welcome you today to this webinar. I want to begin with our land acknowledgement. The Crane Rental Association of Canada acknowledge that our office is located in Regina, Saskatchewan. We are on Treaty 4 land, the territory of the Cree, the Saulteaux, the Ojibwe, the Dakota, Lakota, Nakota, and Métis people. Further, the association respects and affirms the inherent treaty rights of all Indigenous people across the land. I take this opportunity to thank our corporate partners and sponsors, Liber, Tadano, Manitex, Lingbelt, Manitowoc, and Crane and Hoist Canada. And to start our conversation today, I will be joined by 4 wonderful guests, and we are joined now by Mr. Michael Murphy. We call, I think, our friends call him Murph. Is that right?
Okay.
And we also have George Grasso, Stan Alejandropoulos, and Jane King. So I would like to first acknowledge to our members in Canada that you and I have had a little bit of a conversation over a couple of weeks ago. And when I approached our board of directors to have this conversation, my directors basically said, why not invite the membership? Why not invite everyone across our beautiful land to prepare their questions and engage in a conversation with you? I know you've got a great presentation already prepared. So I will invite Michael to, I think, Michael, I'm just going to go a little quickly over your bio here. 35 years of experience across the financial sector, service sectors, and you have been the CEO of the Underwriting Agencies of Australia since 2011. And you're providing the expertise in strategic planning, analytical, and relationship management skills. So today our Canadian friends are in for a treat. They start with my French accent and we now go with yours. So over to you, Michael.
Yeah, thank you so much, Claire. Really just want to thank everybody for taking the time to give us some time. We know how busy everybody is, and particularly as we're all trying to come out of COVID. So it's greatly appreciated. And yes, our accent is slightly different to your French accent. We've got this, I'll speak slowly because it's can be a bit broad, my accent. I'm very much an Australian. And so as everybody can probably tell, what we're here to talk about is, and to learn about and to listen to, and we hope, Claire, people can either put their hand up or they can just ask questions, or you can moderate questions being asked during the course of the presentation, and that we can interact, because that's really what we'd love to do. So slide 1, as you can tell, this is a presentation that we've just done up specifically for the Crane Association, and I think, Claire, we're on about an hour time frame. So thanks for the nod, that'll do me. So we'll try and stick to that very closely. So next slide. It looks like George is running it. Look, just a bit about us. We're in 11 countries around the world. our business was based back in 1972 really about cranes and the crane industry, and the policy that we have is all about cranes and lifting and hooks, which is a little bit unusual, but that's why we're a specialist in, and as we say, in 11 countries around the world. We've been a member of the Crane Association of Australia since for the last 25 years, and New Zealand and Singapore, and we are joining, or if we haven't already joined, in Canada, and we've been a major sponsor there. So we're very much into the entire crane industry, and as you'll see a little bit later, not just for the raw, but for giving back to the industry. So not just for what the rewards give us, but giving back to the industry. So that's really important to us, George. We've got 80% of the crane market in Australia, New Zealand and Fiji, and 50% of the crane market in Singapore. As you can see, as I said, we've been in the market since 1972. So we've got a lot of knowledge around the crane industry across the globe. And as I say, our whole heritage is based around cranes, George. So again, what we've built up is a basis where we have a large and significant pool in an industry which is volatile, and so we look at the industry over a 10-year period, not just over 1 year, and we know that unfortunately and regrettably there was an accident in Canada not so long ago around a tower crane, which unfortunately had a fatality involved. And that's unfortunately also not atypical for the crane industry. There is some volatility, and the amount of claims that you would see in the crane industry are not regular, but they're very big. So there's high severity, low frequency in the claims. So that's something we also understand, and that's something we take into consideration when we underwrite the crane insurance. The other thing that we need to sort of start to talk about here is that unfortunately, because some players in the market haven't been around as long as us, they come in and out of the crane market and create some false expectations around what is a realistic price for crane insurance, what is a realistic cover for crane insurance, when it's not. And that's why the market is diminishing, and the amount of opportunity for crane insurance is a smaller pool than what it would normally be. But we have never gone out of the crane market since 1972, George. As we've talked about, collaborative partnerships with all the crane associations. In fact, we have sponsored educational tours to Australia for the crane industry from Singapore. Now, you would think that Singapore would be a highly regulated and sophisticated crane market, when in fact it's not. Because you would think so, because they can only go up, they can't go wide like Australia and Canada, because there's no land mass. And we'd be particularly interested in sponsoring a tour from Canada, from representatives of, when we can, of course, whenever our governments will allow, a tour from some representatives from CRAC to come to Australia and have a look at some of the differences, and for us to learn from CRAC as well, which is what we have done previously with other organisations. And there's some articles that come up later in the presentation, some press articles that come up in the presentation that talk about how we've worked with the crane industry to develop standards that benefit both the industry, keep them insured, keep them well insured, and also benefit safety. So it's a dedicated policy. It's unique to cranes, and there's some benefits that you won't see anywhere else. It's a single policy, so it's 7 sections. And the most important piece in this whole thing is that everything is done by locally based in-house claims department, a network of repairers and assessors that we recruit globally. Every policy is handcrafted, George. No, yeah. These are just some articles. Well, no. Yeah. As you can see, these are some of the articles that I referred to. This presentation will be made available to everybody at the end of the presentation via Claire, so that Claire can distribute to those that are interested. But these are some of the articles in the press that are Australia-wide that reflect our involvement in the industry, not only the crane industry, we have to say, but also in heavy mobile plant and equipment, as you can see with the yellow equipment on the left-hand side of that slide, and the left-hand side of that slide, you'll see not only do we do cranes, but most heavy plant and equipment, up to equipment that we've insured for up to $15 or $16 million US is the greatest piece of equipment, and just some really ugly, fat, aging blokes. But it's a good story.
Can I just interject there, Murph? Yeah, so we actually work very, very closely with the association and the members of the crane industry to obviously establish what are some of the risks in the industry, and what can we do as a group to try and mitigate those risks, specifically to countries, to metro, to rural environments. So the articles talk a lot about those types of risks, and talks about how we actually work very, very closely with the industry to find solutions to try and mitigate it.
Yep, spot on, George. These are just some of the targeted businesses, and the pictures speak 1,000 words. So these are the occupations that we look to insure, and crane operators, as you can see, is number 1. And the equipment, as we say, doesn't matter the size of the equipment, whether it's a $10,000 forklift or a $16, $17 million crane, as long as it's mobile plant equipment, we'll insure it. And I won't go through this too much, the policy sections, but suffice to say it's 7 sections, and it covers everything from damage, so material damage, through to hired in plant, which is quite a large one. Some additional benefits that we throw in. A big one as well in Canada that we've not seen in our research is, it says financial protection there, but it's probably better known as business interruption insurance. So anything to do financially with any interruption to the crane whilst it's being repaired. So if you have to hire in another crane, the cost of that is covered under an increased cost of working cover. Or you've got finance against it, lease payment protection. So Claire, thanks for keep doing this. Yeah, breakdown is not something we offer, but it's a comprehensive policy all in one. Yeah, and I'll throw to Stan now.
Hi everyone. Thanks, Murph. Murph's already mentioned that the policy, this ISP policy, the 7-section policy, has been specifically put together for mobile plant machinery, and in particular, as we said, the heritage was cranes and lifting. So a lot of the actual covers that I'm just going to touch on here are quite specific to cranes and equipment that are designed to actually lift by hook or by fork. Murph already mentioned Section 2 is a hide-in plant policy. A lot of you would already know that as part of your businesses, obviously you can't own every piece of equipment under your schedule. So therefore, a lot of you will actually go to equipment hire companies or hire equipment in without an operator from an equipment hire company. We specifically have a coverage for that. As you know, when you actually go and hire a piece of equipment from one of these companies, occasionally they'll offer an equipment insurance portion will be part of that hire fee. A lot of those sort of fees that they charge for insurance can be quite expensive, but at the same time, probably limited covers in a lot of cases that we've actually seen. What we do is we actually provide a cover, which we can also include a blanket cover that can save you money on the equipment hire damage waiver fees that you actually get charged. The way it basically works is it's a blanket cover, so it gives you, most importantly, peace of mind, where you actually can tell us approximately what your hire costs are annually. You limit any one item, as in a limited sum insured of any one item, and the types of equipment you actually hire. And we will actually ascertain that risk and charge a premium and give you a blanket cover. And as I said, it gives you peace of mind that every time you hire a piece of equipment from an equipment hire place, you know you've got an adequate cover and you don't actually need to spend money on those damage waiver insurance fees. A very big part of our policy, particularly from the crane section, is our damage to lifted goods cover. That comes under our Section 3 additional benefits. Just to let you know, we actually throw this specific cover in for free up to a certain limit. We currently give you $250,000 for goods on hook. Okay, so everything that you guys are putting on a hook and actually lifting, we automatically give you some automatic coverage for up to $250,000. Now those goods don't have to be specifically owned by somebody else or customers' goods. They can be your own goods as well. It is what we call a full accidental damage cover. In other words, we don't require you to be negligent to actually have a claim. Unlike some of these covers that you actually see that fall under your liability cover, hook liability cover, you need to be negligent for the policy to trigger a claim. In this particular case, it's a full accidental damage cover. So if you're lifting some customers' goods, you can rest assured that if you drop those goods, you will be covered up to $250,000. Now, in saying that, that limit is what we throw in for free. We can tailor every policy to suit your needs. So that limit can be increased to suit your needs. We have, and Murphy, you can pretty much jump in here, but we've seen, because you sign off on them, covers for up to $5 or $6 million per lift for things like aircraft engines and yachts and racing yachts and all alike.
Yeah, no, true. And MRI machines, things like that going into hospitals is quite common. Defence equipment, which we obviously need to research pretty well, but those types of lifts we certainly are well attuned to and see nearly every day.
Yeah, thank you. Look, even with those lifts, I mean, you don't have to increase your limit on an annual basis. We will also look
Just
at
per lift.
individual lifts as well. So if you've got a specific lift that's coming up that has quite a high limit, and you'd want part of that or fully insured or part of that insured, we're more than happy to actually speak to the customers and actually tailor the cover to suit the needs. Another major part of obviously of our coverage, and as you can see, specifically designed for cranes as well, is dual and multi-lift cover. A lot of you will on a regular basis do dual lifts or multi-lifts with various crane companies or your own crane companies. We don't actually need to know every time you do that, unlike a lot of other covers that either exclude it or don't like it or want to know about it before you actually do it. We actually automatically include dual and multi-lift cover. So once again, peace of mind. No need to let your broker or your insurer know every time you're about to do a dual or a multi-lift. So that's a huge plus, and one of the things that is highly appreciated in the crane industries around the world that we actually insure in. Recovery costs no damage. This is obviously something that occurs everywhere. Occasionally you'll have a claim where there's actually no damage to the actual equipment, but it may need to be recovered. It may be stuck in the mud or muskeg, as you guys call it over there, swampy type areas, and it may need recovery. As you know, to recover a crane or a piece of equipment in that sort of a situation can be quite expensive. We automatically throw in up to $50,000 worth of recovery cost cover, even if there's no damage to the machine. Under normal circumstances, under an insurance product, you need to have damage to actually trigger a claim. In our specific case, you don't need to. You've got $50,000 in there automatically for that. And we also give you $250,000 recovery cost damage if there is damage to the actual crane. And the recovery costs for a crane that's fallen over, as you would all know, can be very, very expensive and go into hundreds of thousands of dollars. The basis of settlement for our policy is our standard basis of settlement is market value plus. What does that mean? It basically means that what we do is you actually nominate a sum insured. It works a bit like an agreed value policy, but without a valuation required. Market value plus is you nominate a sum insured on a piece of equipment. In the event of a total loss claim, we will obviously ascertain what that market value is of that piece of equipment. And if you're within 85% of that value, we actually pay out the full value regardless of whether your sum insured is higher. So effectively what really happens there is that you get paid a market value plus a 15% loading. You're always 15% better off than the market value. A prime example of that is, for instance, if you actually had a piece of equipment that you nominated was $100,000 and we worked out it was $86,000 at the time of a total loss, you would get paid out the full $100,000. If we ascertained it was $80,000, so it's outside that 85% capacity, you would get the $80,000 plus a 15% loading. So that would work out to $92,000. Okay, so that's an easy way to sort of explain that. One of the other major benefits of our policies, we have what we call a non-aggregation of excess. Occasionally when we actually have a claim, in a lot of cases, the claim may trigger more than one section of the policy. We mentioned it's a 7-section policy, so you may have a damage claim on your crane, but you also may have a liability claim under Section 7, our public liability policy as well. What happens there is you don't pay an excess per section. You pay the highest excess applicable to that policy and that one single policy. Now that also applies if you have multiple pieces of machinery that are damaged. A great example of that, and in Australia, one of the things we tend to have from a catastrophe type cover is we tend to have floods and bushfires, as you guys have bushfires as well. We've had situations where floods have actually flooded out whole yards and all the equipment was pretty much underwater. Those clients pay one single policy, and that would be the highest, the one single excess, sorry, that would be the highest excess that's applicable to that actual policy. We also cover transit, road, rail and air. We also understand the pieces of equipment that you have need to be transported around vast countries such as Canada and Australia. And sometimes they don't move around on their own steam. They need to be transported. and usually a lot of the companies do their own transport. We automatically cover transport by road, air and rail around the country. We also will look at transit by sea within the Canadian territorial waters or Australian territorial waters, wherever it may be. But we will actually consider that on, but we normally have additional underwriting information that's actually requested so we can ascertain the risk. As you can see there, prime example of that is even working on water, working on a barge. Working over water is automatically covered if you're working from land, but working on water, on a barge or a ship of some sort, needs special attention from an underwriting perspective. But we will actually offer that cover on a regular basis. And Murph already mentioned this one, financial protection cover. This is a very, very unique cover and something that is super important for your style of business as well. In most industries, the sort of equipment that we're talking about, such as cranes, large earth moving gear, it's very, very expensive and usually financed. In the event of a claim and we've got downtime, you know, those repayments still have to happen. A lot of those pieces of equipment are bringing in a lot of revenue into your business that you can't go without. So whilst the machine is being repaired, the revenue stops from that machine. We have various cover options to actually cover situations like that and keep your business going. We have a loss of revenue and increased cost of working cover. Loss of revenue is specific to the machines. Now, a really, really important point here is you don't have to take this cover out for every single one of your machines, but you may want to nominate your larger machines or the ones that are bringing in more revenue than others to actually insure in the event of them being down and being repaired or a total loss. The way this basically works is the loss of revenue is covered for the specific machine, but we can also include things like increased cost of working or blanket increased cost of working, which actually covers any increased costs that your business needs to pay to continue to work. And that is to hire another similar crane in to actually do the job from elsewhere. So we'll cover those costs. Obviously, we mentioned finance. A lot of this equipment is leased. We cover lease payments on a monthly basis as well when the machine's actually being repaired or replaced, as well as lease value protection. A lot of you will know this sort of cover as lease gap protection. And what that basically means, a lot of the times when you buy a piece of equipment, obviously the depreciation maybe depreciates, the machine depreciates a little bit more than what your maybe lease payout figure is. So therefore we cover that gap in the event of that happening. One of the other things, Section 7 of our policy is our full broad form liability cover. And it's really, really important that we understand here that we cover all your declared business activities. Okay, so the public liability policy covers the full activities. It is not specific to just the pieces of equipment that we're actually insuring. So in other words, we're not just covering any damage that a crane does. Okay, we will also cover someone slipping and tripping over in your office or some property. You may own some property, so therefore you may be a property owner and need some liability for that. We cover all of that, those aspects of the business. So it is the full aspects of the business as long as you declare those activities to us. We mentioned a little bit earlier about automatic hook liability. We do damage to lifted goods, as I've already mentioned, which is an accidental damage cover, but we also give you automatically $250,000 worth of hook liability under your public liability policy. As I mentioned earlier, this is only covering customers' goods, not your own goods, and you do need to be negligent or deemed to be negligent for a claim to trigger here. Okay, I'm just going to now hand over to George, who looks after our claims.
All righty, thank you very much for that, Stan. Guys, ladies and gentlemen, I'll be presenting the claims piece of our business. The first piece I'd like to always touch on is, you know, what is we're really selling? Okay, so you know, it's an insurance product. It is ultimately a promise, and you know, it's a contractual agreement between us and our customers through our insurance brokers. We only deal through insurance brokers, just so that you know, 100% of our distribution is actually through our insurance brokers. I'll just get all these points up. Alrighty. So what we do in claims to ensure that we deliver on our promise is we actually assist our brokers and our mutual clients, be it the policyholders themselves, that at the time of an incident, we stand by their side. We assist them through recovery processes. We assist them through the terrible situation that they've actually been exposed to, and ensure that we make every effort to get customers back on their feet as quickly as we possibly can. Our capacity as an insurance company specialising in the crane sector and mobile plant and machinery is extremely large. As Murph and Stan indicated earlier on, we have a very, very large pool. We've been in business for over 48 years, and this is all we do. We don't do anything else. We don't do boats, houses, cars, we don't do anything else. We only specialise in mobile plant and machinery. So the security that we work with have entrusted us quite heavily with our expertise. And we have a very, very large pen from the perspective of our ability to underwrite. We also have a very large ability to manage claims in-house. We don't offshore or send our claims to other entities or companies to actually manage. What we actually do is it's a one-stop shop business and product that we actually do offer you. The next key point is mitigating time and loss, right? So, you know, when a machine is down, it's costing you money. We all know that as a crane rental company, the only way in which you are able to earn income is by charging out the hours and time in which a machine is being operated and used. And certainly at the time of an incident, when something occurs and that dries up or stops, it is our responsibility to work with the industry to make sure we find a way to mitigate time and the loss in which you're incurring. The loss aspect is quite critical to consider as well, because it's an aspect of what losses you've incurred from a damage perspective, and as per some of the covers that Stan has actually referred to, but there will always be or possibly be some uninsured losses as well. So it's really, really important that we find solutions to assist you in reducing that level of exposure. And then the last one, and the most important one, is pay. So this is where our reputation really stands up. Our ability to pay is critically important. How quickly we pay, and pay our customers, pay our repairers, pay our supply chain is really important as well. And that falls in line with our capacity as well, where we have full authority to make payments as we see fit and quickly. We have a saying at UAA, what is our marketing budget? Or when people ask us what is our marketing budget, we say it's over $80 million per annum globally. People go, wow, you spend over $80 million a year just in marketing. And the key to that is, well, that's the amount of claims that we actually do manage and pay over a 12-month period globally on average. And if we do that right, we don't need to pay any money towards marketing or spend too much time in marketing, because our claims processes and our claims services speaks for itself, therefore meeting the promise in which we're guaranteeing to you. Okay, so as touched on before, we manage our claims locally. Now, when I say locally, that'll be in Canada. It's a one-stop shop. So all those components that we actually do provide cover for, so damage, hide in plant, additional benefits, etc., we actually manage that ourselves as well from a claims perspective. So the key aspect here, particularly for insurance brokers, is, you know, instead of having multiple insurers to cover some of these components, and then when an incident occurs, you're dealing with multiple claims departments and their own idiosyncrasies as well. The fortunate thing about working with UAA and being insured with UAA, you're dealing with the one company, the one claims department, the one underwriting department. We manage over 6,500 claims globally per annum, and like I said earlier on, that equates to well over $80 million. And as Murph said earlier on too, it may not seem like a lot of claims, particularly at those dollars, but as Murph said, it's a high severity, low frequency style of business. And we've geared up our business and our organisation to accommodate those types of losses, and certainly that way of how we actually underwrite our business as well. Three key elements to the success of the ISP claims. The ISP stands for Industrial Special Plant, about service quality and costs, of course. The first key one is having skilled claims staff members in our business. They are very passionate about the crane industry and mobile plant and machinery in general, very focused on how to actually mitigate loss for the customer and obviously for the insurance company as well, but without jeopardizing quality. Understanding legal aspects of the claim in their local areas, appointing independent experts and making sure that there is clear understanding as to the instructions that are being provided, good negotiation skills, and very, very customer focused. The second key element is panel skilled loss adjusters. So experts that specifically are from the industry. We're very focused on appointing experts that are specific to machinery. And what I mean by that is we generally don't like appointing generalists, loss adjusters that can work on some machinery and then next moment they could be working on property and so on. We're very specific. So for example, if an incident was to occur and it's on a crane, we'd like to appoint a crane expert that can actually assist the client in mitigating the loss and certainly helping them get back on their feet, working very, very closely with UAA and also working from a loss adjusting perspective. They're technically apt, as I've mentioned there. They have available resources at their fingertips. They can walk into a repair facility. They're well known, they're respected, and certainly can assist in again, getting that machine back up in operation again. Their reporting is well written and timely. And obviously the communication skills is extremely important for us as well. These are the three aspects that we carefully measure when we are appointing experts and working with them. This is an example of where a loss adjuster was appointed and wasn't the right loss adjuster, was appointed by accident. A drill rig, as in this particular case, worth $500,000. The loss adjuster that was appointed, which was the incorrect one, had a look at the drill rig and identified that he felt that it was actually a total loss. This machine was actually taken off that semi-trailer you can see on the right-hand side. And soon enough, a fair bit of rain occurred and flooded the side of the road in which this drill rig was situated in. The drill rig wasn't operating at the time. The water obviously was fresh water, wasn't any salt water or anything along those lines. The loss adjuster felt that it was actually a total loss. It came across our desk and we identified, looking at it saying, hang on, if it's fresh water, we can clearly see that the water line hasn't gone over the engine, hasn't ingested itself into the engine block or anything along those lines. We took that machine out of its current situation, washed it down, cleared out all the lubricants, and had that machine back up and running again in no time at all. The customer was really excited about this because to replace that particular machine was going to take another 6 months, which would have affected the contracting which they had obtained from the local road authorities that they were working for, and was able to get back in operation really quickly. And again, as it shows there below in the highlighted area, that claim actually costed us about $10,000. So significant saving of $500,000, and the client was back in operation in no time. The third key element is skilled repairers. As it says there, they're able to understand the needs of the insurer and the client and are willing to assist. We work with multiple repairers across the industry. We work with original equipment manufacturers, the OEMs, closely, as well as quite a number of independent repairers that we work with as well. We quite like to be frank with you, quite like working with independent repairers a lot of the times because they can certainly get things moving quite quickly. They generally have the right equipment, capacity and capability in the repair facilities to repair machines and get them back in operation quite fast. And this is a point that I personally would like to work closely with you as a group as to what are the type of repairers actually out there in Canada that we could potentially leverage from and work with as an industry moving forward. As we're saying, we're currently in the process of building a business case or building our business to enter into the Canadian market as of 1st of January. and certainly working with you over the next couple of months and really establishing good supply chain that will assist you in your industry will be very, very helpful. We've done a fair bit of work in the background ourselves, but I've always known, even as an ex-repairer myself, I've always known the best people to know who the best repairers are the customers themselves. So I look forward to working with you on that. As it says there in point B, ability to mitigate loss and save costs and time by choosing the best method of repair. Sometimes this is from the process of either choosing repair versus replace where possible, sourcing alternative materials and parts and materials, refabricating where we can as well, and we work very closely with the customer and the industry to ensure that any of those tasks that are taken are going to be certainly within OEM's specifications and industry standards. Alrighty, an example of a repair that we've done, one of many, or hundreds for that matter. This is a fairly unique situation. The Grove crane that you see here turned upside down. The client actually had two cranes going up to a particular site in rural New South Wales of Australia, a place called Mudgee. The two boys driving these cranes thought they'll have a bit of a drag race. One took the corner a little bit too fast and rolled the crane. We supported the client because the client obviously wouldn't endorse that type of behaviour in any case. So we've picked up the claim and we've taken it to one of our repair facilities down in Sydney and had that machine repaired in no time. As you can see on the right hand side, the aftershot and a crane that was repaired for around $400,000 at the time. Down below you see some snippets of the repair facility and the in-house boiler shop that they actually have as well, where they're actually able to refabricate certain componentry when required. I thought I'd use this one as an example as well, probably a little bit close to your country, be it Canada, and it being a SRAM drill rig matter that we actually had a few years ago. SRAM drill rig was out in middle of Queensland, a place called Mowra. We got word that the drill rig mast had actually collapsed. The machine was actually insured at the time with us for $2.5 million. The client was really concerned because they felt it was actually a total loss. They were concerned obviously because it's quite a unique piece of machinery, very difficult to replace. The machine worked 24/7 in regards to its production time and about $1,000 an hour. The machine itself was taken out of operation. How the incident actually occurred, the machine was taken out of operation and provided to one of their specialised repairers to do some servicing. It's one of its scheduled servicing. The servicing that was actually required is to replace the hydraulic ram seals and refill the hydraulic system and go through the testing process. During the testing process, they unpinned the mast. So obviously raised the mast, pinned it, serviced the hydraulic rams, put it all back together and unpinned it, and then went through the testing process, right? When it got to a certain angle, lo and behold, the actual mast had actually collapsed, falling on the actual chassis of the machine. We sent two expert loss adjusters that specialise in drill rigs, again, up to the site, had a good look at the machine, and both reported to us separately, confirming that the machine was actually repairable, that it wasn't deemed a total loss. We contacted SRAM in Canada to see what a mast would actually be worth to replace. It was about $800,000 and about a 6-month wait for it to be built and then sent to us. Now, just keep that in mind, 6 months, $1,000 an hour, 24/7 production, that's a fair bit of dough that the client was actually going to be missing out on. And particularly the fact that they didn't have any business interruption insurance neither. So we took it to our repairer. We had a look at the type of material that the machine was actually made from, be it the mast itself. We were able to source the material locally, and a lot of the times too, if we need to source the material globally, we'll do that as well. And quite often some of this high-tech, high-tensile steel can actually be purchased from countries such as Switzerland or Germany. So we sourced the material, identified the type it was made from. We actually went through the process of repairing the mast. And as you can see there, we actually went through a cut and shut process. We had independent engineers sign off on the process of the repair prior to the repair commencing, during the process, and certainly post-repair inspection and sign off by the engineers. We went through the testing process as well, ensuring that the machine was operating as it should have, and we were able to complete those repairs within 12 weeks. That 12-week period is also during Christmas and New Year, and the cost of those repairs were around about $450,000. Again, a very, very happy client that they're able to get the machines back in operation quite quickly, as opposed to waiting six months for a new mast and then thus another couple of months to actually fit it and then get it tested. So we did all that within a 12-week period. The other key component in regards to this particular claim that I'd like to share with you is that it wasn't just about repairing the machine and getting it back in operation. It was also about trying to understand why the incident occurred. And what we actually identified through a process of elimination was our initial thoughts that the aftermarket seals they used in the hydraulic rams were actually incorrect. They proved to be quite good, and certainly the same as the OEM seals in which they normally would use. But what we actually identified is they must not have bled the hydraulic system appropriately. And through the process of obviously testing, there was obviously an air pocket in the hydraulic system that was still remaining, similar to turbulence in an aeroplane. Once it got to that point, it dropped, and it was a point of no recovery. We went to the client and said, look, we understand that you had a specialist third-party repairer repair your machine. We're of the view that we have the opportunity to subrogate or recover the cost or the loss in which you've incurred. So the loss from a damage perspective that we were paying, but also for the uninsured losses that the client actually had incurred as well. And we made sure that it was okay for us to seek that subrogation rights against that particular entity. They were quite happy with that. We commenced that process, and I can proudly say that during over an 18-month process of proving our case and the evidence in which we had gathered from our experts, we were able to confirm that that was the cause, and we received full recovery of the cost of the damage itself, so the repair cost, as well as 100% of the uninsured loss that the client had actually incurred as well. And we brought that in as part of our recovery costs. Even though it wasn't a loss that we incurred ourselves as an insurance company, we invited the customer to provide their uninsured losses, had that tested, and then receive that full 100% recovery. So that's the type of claim service that we actually do provide. That's the type of repair processes we actually do provide. Very focused and specialized in machinery, very focused in mitigating time and loss combined.
George, it's really important to sort of probably note as well that by recovering those costs as well, in addition to the client actually, obviously recovering their uninsured losses, the client also doesn't carry that large claim onto their insurance policy for the next 5 or 10 years and pay a premium because of that. So it's very, very important that we work together with the clients to make sure that we recover everything that we can in regards to claims. It's an important point.
Absolutely, mate. Absolutely.
And nor did they carry the premium into the policy. So that work was done because that's our undertaking to our clients, is to give them the best outcome.
Correct.
Absolutely correct. So as we said earlier on, we have a fairly large pool that we actually do
and George,
manage.
you're not going to go through all of these individually. Suffice to say, because it's 10 to 8 our time, so I'm sure you're just going to cover the touch points briefly.
Absolutely, Murph. Absolutely. So going back to that point earlier on about pool of money is really, really key to manage that loss, because it's not just managing the loss from our perspective as an insurance company, but obviously, as important that you're not carrying any unnecessary claims experiences moving forward either. And we manage our business as well via types of machinery. So, and we manage the pool accordingly with that as well. If there is an increase in that, then that may make some amendments to our rating structure per machine. We don't have a standard rate across the entire board of machines out there. It's very, very specific and niche to each machine, each type of machine, and we measure that very, very carefully. In front of you at the moment is the 10 key touch points of the claims process. As Murph has alluded, I won't take you through the details of each step in every detail, but obviously from a notification perspective, we don't wait for a claim form to come in necessarily. Some of these incidences that do occur are unfortunately quite spectacular, and certainly can attract quite a lot of media attention, and particularly in our current environment and world where the media attention is available at your fingertips with social media, etc. The minute that we identify and see that there is an incident that's actually occurred, we're out there trying to understand, is it one of our customers? And if it is, let's get out there straight away. We don't have to wait for a claim form. That takes us to our next point, the assist. Get out there straight away with our experts, stand by our clients, assist with the recovery process. The recovery process is really, really important for us. And why it's really important is, I can't tell you how many times I've seen poor recovery processes being conducted globally, whereby the recovery process itself has actually caused more damage to the machine than the actual incident itself. We're very focused on recovering the machine where possible in the same way it actually had fallen over or involved in that particular incident, carefully recovering it and having it brought to one of the repair facilities agreed upon between us and the customer. We obviously assess the damage, identify what is the most appropriate way to repair that machine, what is the correct repair methods, how can we actually mitigate that time again to assist in getting that machine back in operation again. We obtain the facts associated around the cause of the incident, overlay policy conditions, and at that point in time, we actually then provide indemnity. Our general time frame in regards to notification of indemnity is around about, on average, 1 week. Within a week of the incident, we're able to gather enough facts and information evidence to confirm indemnity. And then what we like to do is actually authorise repairs to the repair industry, to our most appropriate repair in the repair industry. We become a work provider for the repair industry as well, and certainly being recognised as a reputable insurance company that customers should insure with. We then pay, our most critical point, and like I say there as well, I don't mind if you lose some of my money, but if you lose my reputation, I'll be ruthless. And that's a statement from Warren Buffett himself. And my team and I like to live and die by that particular statement. We subrogate, we recover. We're very relentless in our recovery process. And where possible, if we can recover at least 80%, if we can negotiate a way where we can at least try and recover 80% today, as opposed to going through heavy litigation over the next 2, 5, 7 years, then we will certainly like to push that negotiation barrow with the liable parties and recover those costs that have been lost by the customer and by the insurance company as well. Communication is critically important, frequently following up, remaining commercial in our approach all the time, maintain relationships, mitigating loss, always being well prepared. So they're the 10 key touch points of the success of our claims process. That brings us to the last slide. We'll open it up to the room. We've got another 9 more minutes to go. Any questions, feel free to ask by putting your hand up, and certainly putting it through, and Claire will actually monitor those and put those questions forward to us. On this slide that you see in front of us, 2 email addresses. If you have any other questions outside of this, feel free to touch base with either Michael Murphy or I. And that's a beautiful picture that's in front of you at the moment. It's one of our customers in rural New South Wales, a place called Dubbo. There was imminent floods that were coming through that area. The entire area had about 4 days notice that there was going to be imminent floods. This particular client is an earth moving client, as you can see. With their machinery, they took it upon themselves to build a moat around their business, protected millions of dollars worth of assets. The client themselves spent approximately $80,000 in building that moat by using their own equipment and labour hire and materials in which they quickly brought in. Now, as Stan said earlier on, for any policy out there in the market to trigger, damage must be triggered first. In this case, the client hadn't triggered any damage. We were more than happy to pay them the $80,000 in which they've incurred, because they saved us millions in return. So again, the things that we do is we try and do them through our actions as opposed to just words, and keep customers, be it brokers and the policyholders, for life. And this is certainly one of those customers indeed.
Yeah, so it's and I just want to reinforce that story. So this particular client has just renewed his policy with us yesterday. When we first got this customer 17 years ago, and many of our customers have been with us. Some of our customers, there's a customer here where I live called Waters Cranes that have been with us since 1972, so the entire time, okay? But this customer was a brand new business. They only had, when they came to us first, they only had about $3 million worth of equipment. At this time, they had about $5 to $6 million. They're now publicly listed on the Australian Stock Exchange. They're called Mars Group, MAAS Group Holdings. You can look them up on the ASX. They're trading at about $5.20. And they have now, we've grown with them from being a small company with numerous pieces of machinery to a multi-billion-dollar company. And we've grown all the way with them. And that's what we love to do, is to get involved with our clients and grow and be part of their business and enjoy their success and celebrate their success with them. It's a cracking story, this one. If anybody doesn't know where Dubbo is, it's in central west New South Wales. So it's in a very harsh environment with a large Indigenous community. And for them to grow from there and for us to be part of it is something that we really rejoice. And I'm sure there's lots of those good stories to be had in Canada, and we'd like to be part of it. So thank you to Stan and George. And I guess, Claire, if there are questions or views or inputs that can help us, that would be really valuable.
George, if you want to stop the share so that we can actually see everyone a little closer. I had a ton of questions prepared, but you answered most of them through your presentation. You mentioned January 1st would be your entry into the Canadian market. What can you tell us about the difference in governance policies between Australia and Canada that you have encountered since you've started working on your entry to this country?
Yeah.
I think Stan's
I was just going to point out, I think the Australian market from an insurance point of view, and also the Canadian market, are very, very similar. In fact, we haven't encountered a lot of differences. One of the major differences from a governance and also a coverage perspective that we've also had a look at is the public liability side of things. That's a huge difference in that in the Australian market in particular, personal injury is a major factor for us, and I suppose the performance of the Crane portfolio. Personal injury is a major factor because there's obviously huge claims in that specific area. The way it works in Australia is obviously we have a workers' compensation style cover as well as you do in Canada. But what tends to happen in Australia, it's heavily, I suppose they litigate against the insurer. So the workers' compensation will pay out the personal injury side of things to the employee, but then they will come back at the insurer and actually try and claim all their money back. So we end up paying as an insurance company those large claims. Whereas in Canada, one of the major differences is obviously that doesn't occur in your market, which makes it a lot more palatable for us, particularly from a liability perspective. That's one of the areas. As far as the law and everything, very, very similar to Australia, being English law in other than Quebec, obviously. We find it's a really suitable market for us, and one of the reasons why we're very, very keen to actually get over there.
Okay.
Yeah, that's right. So just to add on that, I mean, we know of market in Canada is certainly restricting, and that's not just happening in Canada; it's actually happening globally due to the poor performance of their portfolios, particularly in this sector. As we said earlier on, this is all we do. We don't do anything else. Well, we've been successful for over 48 years. We continue to be successful. The way we actually manage our underwriting, the way we actually manage our claims, the way we actually manage our relationships with insurance brokers and clients, policyholders, is extremely key, and that's one of the huge differentiating factors between what we do in comparison to the market across the globe.
Claire, I think one of the things that we have seen, and you're asking, I'm sure not just about the policies or about, but in regulation terms, Australia, I think, which is where you were going, in a regulatory environment, Australia is probably a lot stricter than Canada in terms of the review of how operationally sound cranes are. But having said that, Australia is the review of the crane industry is run by the crane industry. So it's an interesting conundrum where you have a self-review process, basically. So you've got crane safe and those types of environments. So it's very, in New Zealand's actually reviews the crane safety every year and the quality of the cranes every year, where Australia is 5 and 10 years. So it's quite interesting. Other than that, things are very, very similar between Australia and Canada, which gives us a lot of confidence. And the reason it gives us confidence is not about us being an insurer, but about us understanding the operational aspects of cranes and in understanding the market. Now, the thing that we need to understand is the conditions that exist in Canada. So that's the biggest difference. So whilst we're in very harsh climates, both countries, ours is hot, yours is bloody cold, right? So, we don't have to operate or run mobile cranes across ice or anything like that, or in snow or in freezing conditions. That doesn't exist here. It does in New Zealand. So we've got some experience there. So particularly down south on the South Island. So that gives us a lot of confidence as well that we can assimilate well with the crane market. But the last thing that's similar everywhere in the world is a Liebherr crane is a Liebherr crane. A Tadano crane is a Tadano crane. A Grove is a Grove. And that's one thing. It doesn't matter where you are in the world. That doesn't change. They're manufactured pretty much similarly for every country. So that's important to know. And lastly, crane operators anywhere in the world are crane operators or crane rental operators are pretty similar, and we enjoy their company a lot.
In terms of other questions that I'm monitoring as I'm going through my own question is, we're living in a changed world, in a continuously changing world, and we're seeing a big shift here from oil and gas operations to a greater presence in the wind sector and the solar, and certainly agriculture will always remain our closest connection with Australia. How's climate change impacting the the industry for you, and is that something that's top of mind when you're looking at what's going on?
Yeah, Claire, I can probably answer that one as well. Definitely. For us, wind farms have become a key part of the mobile crane industry. Now, the interesting part about that is that wind farms are relatively new for crane operators, right? So for those guys that I can see a question from Ryan there, and I'll come back to that one as well.
Perfect.
So that's relatively new. So crane operators have been fantastic around buildings and work sites, etc. Getting out on wind farms is a whole new risk that we see, and we've had to adjust our policies. And one of the articles that you're more than welcome to share, Claire, actually relates around wind farm operation for.
Oops, we've lost you, Merv.
They normally require very large cranes,
Yes.
and the risk is totally different. So the ground is normally not as secure. It's not flat. It's not on concrete, for example. It's normally remote, and it's windy, right? Otherwise, you wouldn't have a wind farm, right? So lifting a turbine and lifting the propeller for that is hugely risky, inherently risky. And that is something that we do, and we've assessed, and we're starting to understand. But yes, to your point, the global changes in climate are very much an impact in this part of the world, and including the work that we do in the Pacific, where it's even more more obvious. So Singapore, where their land mass is shrinking, and they have to keep doing reclamation to regain their land mass. Fiji, we've got some equipment in the Solomon Islands and Samoa, and all of those islands are shrinking because of climate change. It's a massive issue, and we're very much part of that. And our crane operators are very much part of it, and really addressing it with how they adopt and adapt is a better word to those industries. And the biggest industry coming out of it for us in Australia is wind farming, and New Zealand. New Zealand's already massive in wind farms.
I'll have a second part to that question, but I want to make sure we get to Ryan's question first.
Yeah.
Can you see it on your screen?
Yeah.
I can see that one. Ryan, yes, the quick answer is yes. Tower cranes are actually core and preferred business to us. In your specific case, we automatically, if you actually own and are hiring out a fleet of tower cranes, I'm assuming you're hiring them without an operator from the looks of things. But either way, either with an operator or without an operator, we do actually cover both those situations, dry hire and wet hire situations. We also would cover the mobilisation of those tower cranes onto sites. Now, so that would be covered. We would have that obviously under a public liability section. So if you were negligent for any of the, I suppose, erection of that crane and something went wrong, we would actually cover that under our section 7. But obviously material damage would automatically cover tower cranes. So a quick answer to your question there is yes, that would be part of our coverage offering.
So with the tower cranes, and I think in Canada, Claire, I'm going to get this wrong, but I'm going to have a stab at it. We call it wet hire. I think you call it bear hire, or is that
bear
right?
Rental. Yeah, bear rental.
Bear rental. There you go.
Yeah.
So with the tower cranes, they're actually, as Stan said, a preferred risk. And I started this presentation by regrettably talking about the tower crane in Toronto, but they are actually a preferred risk. We're the largest insurer of tower cranes. The biggest risk with tower cranes is actually in the commissioning and decommissioning. Once they're up, they're normally pretty good. One of the things we hope that the operators or the hirer understands, if wind comes in, they let them weather vane as opposed to locking them in. We would hope that occurs, because it's a much better result.
I hope that answers your question, Ryan. Correct, or Crane or Barrett. Okay, perfect.
Hey, you got it right. There you go.
Good. The second part to my question was, CRAC is now a member of the International Crane Stakeholders Assembly, and we collaborate around the world preparing guidance manual for our members. In our case this morning, I was on a pile driving guidance manual, and being on the wind farm as well. And there's others working on vessels or, barges, as you said. Do you take into consideration, when the membership of an organization like ours follows those guidelines as well? Are they tools that you actually incorporate in your work?
Definitely. Absolutely, definitely. So if it's our preferred insured would be somebody that, number one, is a member of your organization, number two, adheres to the governance and adheres to not your regulations, but your guidelines and recommended modes of operation. And we would expect that those who are members would adhere to that. And then those that aren't would be worried why they're not members, if they're worried about operating in those respects. That would be a major concern to us, and a major underwriting issue, whether it's to not we would in fact insure them, because we wouldn't understand why you wouldn't want to be a member and adhere to what is inherently the right way to operate equipment. That would sort of imply I'm a cowboy.
All right. And one of, I think, my last question that I had written down was that we're now dealing with very sophisticated equipment, electronics, and do you also insure cyber crimes or a data breach of cranes? And I see a smile there.
George can probably answer this the best, but what in terms of the electronics on the crane, so there's a couple of parts to your question, Claire.
Yes.
And I'm going to have to be very careful how I break this down, because it's important. In terms of the electronics and most parts of the crane, that is included in the insurance. Cyber attack, on the other hand, and George, slap me if I'm getting this wrong, right? Just hit me. Cyber is not. Now, the reason I was smiling is that for some time we've been working on having Section 8 in our policy, of our 7-section policy, which is cyber. Now, we haven't quite been able to get there yet, but we're very aware of the need to have it, because as the crane industry, to your classic point, Claire, increases its technology and increases the use of its technology and its reliance on its technology, then they're more susceptible to some form of attack. George, how did I go? And I know you'll be able to add to that.
No, you're exactly right. And Claire, you've hit the nail on the head as well. There's a lot of new technology coming out in machinery in general. We see a lot of remote control technology, GPS environments now these days, particularly in the earth moving space. A lot of technology, obviously, in the crane space as well. We have, quite often we do see claims or incidences of lightning strikes that have affected some of the technology equipment on machinery, particularly cranes. And as Murph said, we cover that type of technology and certainly that type of incident. Just to reiterate, yes, we have been exploring the opportunity to embark on cyber attack overall. It is quite complex, and it's certainly a new world of pain that we're all going through globally, to be quite frank, and certainly understanding the risks and how it's created and how we can actually provide assistance to our customers is part of our ongoing exploration in that part. But we would certainly recommend customers out there that there are some specific cyber insurance policies that do exist, and they do cover all aspects associated to a cyber attack. But it's not foreign to us, and we would probably be one of the only insurance companies globally that specialize in machinery that's actually looking at introducing our own type of cover around it.
Yeah, that's a really good point, Claire. What we find at the moment, though, is most of the attacks that cause us problems and cause the industry problems are not those from cyber, but those from overriding technology by the operator.
Okay, interesting.
So the operator could slip a credit card in or put a key in or do something that's not in the best interest. So we still see the human intervention at this point, at this very juncture, but will definitely change. Change.
We're also looking at the data breach. We have since, this year, the electronic logging devices laws coming through. And right now, each province has a different way of looking at it. In some province, mobile cranes are exempt, in others they're not. So we're trying to kind of look at this. But one of the interesting factors that as I was reading through the electronic logging devices was the data breach, that sometimes people are accessing the data, that people who shouldn't be accessing the data, kind of thing. So again, there's it's a huge undertaking to look at all these aspects, and I'm sure you will be entertained in that field for many years to come, and we will probably have other conversation on this. I'd love to say hello to Jane. Jane was there as a support, but also tell us a little bit about yourself before we wrap this up, Jane.
Thank you, Claire. Yes, I like to be the support person behind the guys. So a little bit about myself. I've been with UAA for 15 and a half years. I'm currently in the role of Chief Underwriting Officer, and I also run Queensland, being the Regional Manager of Queensland, which is our second biggest state in Australia.
Great.
Yes, and
Yeah, she's undersold herself. She actually keeps us all honest, and she's one of the key integral people behind how we actually underwrite globally, making sure that the words we're using are correct in our policies and all those sorts of things. So she's very integral to our business. That's
the part of the reason she's here, and she looks at me closely, is to make sure I'm not over promising things and saying things that get her into, get me into trouble with her, but she has to clean up. So that's how it works. In addition, Jane has come to us as a young lady, and she's still a young lady, but as a very young lady, and worked her way all the way through to become the global underwriting chief. So it's a pretty good news. And she comes from a little country town not far from Dubbo, to be honest, that we were just talking about earlier. So she's a great story and a great person, and she's also a shareholder in the business.
That's great to hear. I think for a group of people who just rolled out of bed before coming on this call, you outdid yourself. I know it was very early for you to agree to do this presentation. For us, like I said earlier, it's a 5-hour span across the country. So I really wanted to give a chance to our members to join us. And it's been a delightful conversation. I think we have a great information package to share with our membership. George, I'll ask you to put the last slide back up so that your email and Murph's email is there, and people can actually reach you if they have any further question. I want to say on behalf of my board of directors that this is not an endorsement of the Underwriting Agencies of Australia, but a facilitation of information for our membership. And I really wanted to make sure everyone on our membership understood that we were contacted. We felt that this was a great conversation to have, great amount of information to share with our membership. And I'm really, really glad you could join us today. So thanks again, gentlemen. I will stop the recording of this presentation to